All right, if you've been keeping an eye on the lithium market, I bet all you've heard is doom and gloom, right? Prices are in the tank and everyone's screaming oversupply. But what if the headlines are getting it completely wrong? Today, we are diving into a really fascinating puzzle. It's this huge disconnect between how everyone feels about lithium right now and where the smart money is actually betting it's all going by 2026. Yeah, we're talking about the lithium paradox.
So this really gets us to the heart of the matter. The big question every single investor is wrestling with. Is this it? Is the lithium party over? Or is this quiet patch just the calm before an absolute monster of a storm? And that, right there, is the classic investor's dilemma. Every article, every headline is screaming at you to sell, but if you look closely, some really interesting signals are starting to flash by.
Okay, let's dive right into this paradox.
So, the story everyone's telling is pretty simple, right? You see it everywhere. The lithium market is supposedly drowning in a sea of oversupply. I mean, the forecast for 2025, it's pointing to a surplus of something like 200,000 tons. And look, with a glut that massive, of course prices are low. It makes perfect sense. You've got all this new capacity from South America, Africa, and China just flooding the market all at once. It's a textbook case of a cyclical bust. But, and this is a big but, this is where things get really, really interesting. While the whole world is fixated on today's surplus, something else is happening. Chinese lithium futures, and remember, these are basically just bets on where the price is going to be down the road, they're surging. We're talking nearing a one-year high. So you have to ask yourself, why on earth would traders be betting on higher prices in the future if we're drowning in the stuff today? Well, the answer is simple. The smart money, they're already smelling a turnaround.
And this brings us to how we solve this whole puzzle. We've got to decode the commodity cycle. Think of it like the market's two-year crystal ball. It's the absolute key to understanding why today's gloomy headlines might not matter nearly as much as you'd think.
Look, when it comes to any commodity, the cycle is everything. It's this almost predictable rhythm of boom and bust. But here's the golden rule, the one thing you have to remember. It's not about what's happening right now, not at all. It is all about predicting that gap between supply and demand 2 years out. That's the game. And that's exactly what the pros are pricing in.
And this little timeline here shows it perfectly. Look, we've already been through the peak, right? The crazy boom times. Right now, we are smack in the middle of the bust, the oversupply phase. And that's where all the negative headlines, all the bad feelings are coming from. But here's the thing, the market isn't looking here anymore. Nope, it's already looking past this bottom and pricing in the recovery that's coming 2 years from now. It's already anticipating the next shortage.
So the big question is, what's going to trigger that next shortage? Well, this is where the story takes a really interesting turn. This is kind of the aha moment of this whole thing. Turns out there's a huge, absolutely massive source of demand on the horizon that almost everyone is seriously underestimating.
You know, for years, when you said lithium, you pretty much meant one thing: electric vehicles. And don't get me wrong, EV demand is still growing at a nice, stable clip. That's the known story, but it's not the game changer anymore. The real story, the hidden engine that is about to completely shatter all the demand forecasts, is battery energy storage. You'll hear it called BESS. So while EVs are on a steady climb, energy storage is on a rocket ship.
And hey, this isn't just some wild theory. The numbers are right here. Just look at this. In only the first 3 quarters of this year, the production of battery cells made just for energy storage, it shot up by more than 57%. Let that sink in. 57.5%. That is the kind of insane growth that doesn't just tweak forecasts, it completely blows them up. This isn't just growth, folks. This is a demand shock waiting to happen.
And get this, the market is already scrambling to keep up. This number here, the inventory to sales ratio, it's plunged from 1.83 all the way down to just 0.8. So what does that actually mean in plain English? It means they're already running out. Shortages are already happening. They are selling these battery storage systems way faster than they can build them. It's a flashing red light that this demand isn't some far-off dream. It's real, and it's happening right now.
Okay, so on one side of the scale, we've got this explosive, totally underestimated demand. But what about the other side, the supply? Well, this is where the plot thickens, because just as demand is about to go vertical, the world is on a collision course with a massive supply wall.
Yeah, getting new lithium out of the ground isn't as easy as just flipping a switch. I mean, think about it. Down in South America, where they have these huge salt lake reserves, environmental rules are getting way, way tougher. Over in Africa, you've got promising new mining projects tangled up in some serious political risk. And just globally, the low-hanging fruit has been picked. The easy-to-get, high-quality stuff is mostly gone. What's left is harder to get to and costs a lot more to develop. You add all that up, and the natural growth rate for supply, it's struggling to even get to 15%.
So let's just put the two pieces together. You've got explosive, overlooked demand from energy storage slamming into a supply chain that's constrained and slow to respond. That, my friends, is the perfect recipe for a huge market reversal in 2026.
All right, let's actually run the numbers here for 2026. Projections say supply might hit around 1.95 million tons. Now, if demand grows by, let's say, a pretty strong but still believable 30%, well, you end up with a market that's more or less balanced. No big deal, but, and this is the critical part, what if that energy storage boom pushes demand growth to 40%? All of a sudden, you're looking at demand of over 2 million tons. And just like that, you flip from a balanced market to a significant deficit. The whole narrative flips on its head.
And a deficit? What does that actually do to prices? Well, you don't have to take my word for it. Li Liangbin, who's the chairman of the industry giant Ganfeng Lithium, he put it pretty bluntly. He said if demand grows by that 30 or 40%, we could see lithium prices more than double, surging all the way back up to 150,000, maybe even 200,000 RMB. That's the kind of insane price spike you get when a real supply crunch hits.
So, when you boil it all down, here's the takeaway. Today's headlines, they're all stuck talking about the oversupply of 2025. But the smart money, it's already looking way past that. You've got the futures market, you've got this insane demand from energy storage, and you've got these very real supply problems, and they are all painting a completely different picture for 2026. This isn't just about feelings or sentiment, it's about the cold, hard logic of the commodity cycle. Which really just leaves us with one final question to think about. The market is already starting to price in 2026. Are you?